So I'm going to talk about Ethereum today. The good, the bad, the ugly. We'll go into a price prediction, and then I'll show you or discuss a strategy that I'm doing that I believe is incredibly risky and you shouldn't do it. This is Crypto for the Rest of Us, 6 days a week, tip, tool, or coin analysis. Disclaimer, informational purposes only, educational purposes only. I'm a big dumb animal. Don't do what I do. Let's talk about Ethereum because it's not talked about a lot. Why? Well, I mean, it is, but not in terms of, oh, this could 10x or 20x, and here's how you make all your money in a bull run. Bitcoin, Ethereum, top 2 market cap, first mover advantages, if you will. Obviously, Bitcoin's different than everything else significantly. But let's talk about Ethereum. I love Ethereum, but for various reasons. Now, let's talk about the good. Recent article, Ethereum, odds of ETH hitting a new all-time high. 2 things that they talk about. First, Ethereum has been accumulating since its peak and recently broke out of an upward pattern, testing the previous high, confirming an uptrend. What do they talk about here? Well, they talk about the 2 different things. That when Ethereum just broke down like the rest of the market and dropped significantly, BlackRock bought 47 million worth of Ethereum. So as they saw it drop, they went all in. Then wallet activity. They point out the fact that here, as it hit its bottom, which goes back to around February of 24, wallet activity took off. They've got the price going up, the active addresses going up, 24-hour, 1 hour, and then they've got network growth on here. But their basic point is that people were buying as it went down, and activity has gone up as it's rebounded. Okay, that's the good. Let's talk about the bad. It's not that bad, and it may not be bad at all for you. It isn't for me. They're talking about ETFs. So when you look at the Bitcoin ETFs, the amount of money flowing in, you compare that to the Ethereum ETFs, the amount of money flowing in. Obviously, they're going to be different, but there's a big reason that the Ethereum ETFs may never quite take off as much as the Bitcoin. Not really bad. The reason, I think you probably already know, is that you can't stake, or they don't provide a dividend. Oftentimes, if you invest in, let's say it's the Standard & Poor's 500 ETF, whatever it is, if there's dividends, you're going to receive dividends. We know that you can stake your Ethereum for a rate of return. You can't get that in an ETF. One of the reasons is when you stake, it takes a while to unstake. So if the Ethereum ETF wants to remain incredibly liquid, well, if I want to sell my Ethereum ETF today and it's been staked, they can't just give it back to me immediately. Or at least they would have to hold some aside. So it's too difficult. They were approved because they weren't going to allow staking. So for those of us that want to stake it or want to use it as collateral and want to do things with it, instead of just holding it, you're not going to buy the ETF. Now, it's not terrible because you can still buy it, put it in your wallet, use it as collateral, stake it, whatever you want to do. That was the point of this article. Not a huge deal in my opinion. Let's just call that the bad. Now, the ugly, there is an individual that pointed out, as well they should, that things can always go down even more. And I'm going to put links to all 3 of these articles so you can go into more detail. This individual talks about the fact that he saw that in the 2016 breakdown, 2019 breakdown, he believes the pattern might play out the same here. If so, he's calling for 70% loss of value to the 1150 range, which I believe goes pretty far back. But let's look at, so that's the ugly, okay? So yeah, there's a potential upside. There's always a potential downside. I dollar cost average as much as I can in order to hopefully avoid too much of a difference in price differential. This is the Ethereum chart on the daily with respect to the US dollar. Got the RSI down here, and this is a 200-day moving average, a really long-term moving average. The last run up, it did break when it had a retracement, the 200-day. It took off, broke it, and then, of course, continued down. This is essentially last year, 2023, all the way up to about here. So you can see it broke when it started taking off back here in November, December of last year. Once it broke through this price range, which was around 2100, then it retested it and then it took off. And then since it's had a retracement, now it, just like last time, broke through the 200-day, but came down significantly. I mean, this price wick was down to around 2400. And that goes back to, it could be a support level, who knows? And that goes back to November of 23. and April. So if you were buying last year in 23, you're anywhere from, looks like 1,500 to 24, 20, let's call it 1,500 to 2,500, relatively speaking. Okay, now things are wicked pretty far down, but it's around 2,500 right now. But look, the all-time high was back last run up and it was 4,800. Let's just call it 5,000 in terms of easy round numbers. So what would I think with respect to Ethereum? First, let me say, why do I have it? I look at my crypto in different buckets. I'm long-term and I'm short-term. My Bitcoin, I'm a hodler. I got it. I hold it. I just want to keep it for a long period of time. Ethereum, I got it. I hold it. It's great for collateral. I'm going to get into that for a second. I believe it's one of the best things for collateral if you want to truly unbank yourself and be your own bank. So I love Ethereum for that reason. But it's not one of those things that I have and I'm thinking, ooh, this could 5x or 10x or 20x in this next bull run. However, I believe the signs are pointing to it doing much more explosive things than I thought originally. I would love to see Ethereum go from 2,500 to hit that all-time high of 5,000. If it broke through, wonderful. But if I had Ethereum because of my cost basis, if I had it go to 5,000, I'd be happy with a 2x or a little more than a 2x. That's great. But take a look at this, which I think is interesting. Ethereum market cap. So last time Ethereum market cap hit around, 580 billion? Okay, right now it's at the current price of $2,500. This is August 8th, $2,500 Ethereum price. The market cap is around 300 billion. That's interesting. So if one could see it hit, look, that's almost 700 billion last round. So I could see it 3xing. I could see it hit $1 trillion. It's a magic number. Or potentially go over $1 trillion. If it were to hit close to $1 trillion, that's a 3x. 300 billion to 900 billion is a 3x, which would take your price, and I realize there's tokenomics involved, so it's not a one-for-one, but generally speaking, if it 3x'd at 2,500, you're looking at a $7,500 Ethereum. My stupid lizard brain can't really foresee that. I would be ecstatic at 5,000. I don't know what I would do at 7,500. I'd probably sell some of it at 7,500. But if it would break $1 trillion, which is entirely possible during this next bull run, that's a 4x. So I think Ethereum could do $7,500 to $10,000 in this next run up. I'd be happy with 5. I wouldn't be surprised if it comes back and retraces to 5. Would I unload some of it? Probably. So that gets me to, so there's my prediction there. 5 would be great, but I really think it could do 7,500 to 10,000. What I'm going to tell you is something that you should not do. And that is, and I've shown this before and I'll show it again. I'm going to do another video on it. I use Ethereum as my bank. I'm using it in Aave as collateral for loans that I take out in dollars. Theoretically, with that price escalating, meaning that those loans would eventually be paid off with my price appreciation in Ethereum. I keep my loan to value really low because you can be liquidated. It's around 80 or 83% you'll be liquidated. Mine's around 50%, but I'll be honest, what happened recently was when this took a huge dip, obviously my loan to value changed and it was getting down to an uncomfortable territory. I wasn't going to be liquidated, but I like to keep a 50% ratio. So what I did, which I thought was kind of funny, originally I thought, oh, I'll just take some USDT and I'll just pay off some of my loan. And I thought, wait a second. If I'm a true believer in Ethereum, and Ethereum has dropped, it was much lower, 2,200? If Ethereum has dropped that much, why don't I just buy more Ethereum and stake more? So that's what I did, which was interesting. I'm finally getting out of the matrix thought of dollars. And I said, no, don't pay down the loan. Buy more Ethereum because it's super cheap and just stake it and change your loan to value ratio that way. So that's what I did. So if you want to see the bald guy get wrecked, possibly continue watching. If Ethereum were to drop to 1,000, I'm either going to be slightly liquidated in some of my loans, or I'm going to have to buy way more Ethereum, which I'll probably do. But I'll do a whole video on what I'm talking about. That's the way I treat Ethereum, and that's the background for why I own it. I'm going to hold Bitcoin for the long term, I'm going to use Ethereum because at the moment it's the best collateral, in my opinion. And for whatever you're not using as collateral, you actually get an APY. Not a lot, but something. Better than nothing. So that's it for the day. That's the good, the bad, the ugly. That's my price prediction for Ethereum, 7,500 to 10,000 in this next run up. Personally, be incredibly happy with 5,000. And I'll do a video on how I'm using Ethereum to escape the matrix and be my own bank and no longer touch US dollars. Have a great day. Thanks for watching. Let's make generational wealth together with crypto.